Welcome back to the deep dive. We've got quite a stack of sources in front of us today. Articles, research, and your own notes, actually. They touch on some really fundamental stuff. Economic systems, potential control mechanisms, and some visions of the future, including, frankly, some pretty concerning possibilities.
Yeah, it's a lot to dig into, for sure. And you mentioned how themes, like those in the TV show Continuum, kind of resonated with you, prompting thoughts about the long-term effects of what's happening now, seeing the forest through the trees of daily news.
Exactly. And you came to us with a really direct question that pulls all these threads together you're asking. Are recent events, the pandemic response, political shifts, immigration, inflation, all this building of interoperable databases, even AI seeming to need so much personal data, are these things putting us on a path towards something Orwellian?
Right. Are powerful entities, maybe NGOs, maybe billionaires, are they sort of manipulating things, socially engineering us towards some of these really alarming scenarios, like that transhumanist debt slavery idea from Continuum you mentioned, or things described in some of the transcripts you sent over? What could the world actually look like in, say, 2077?
Those are definitely the big questions on the table. So our mission here, and we're sticking strictly to the source material you've shared, is to unpack these concerns. We're going to explore the ideas presented in these documents, look at these possible futures, not by just dismissing them, but by really examining the arguments, the information provided to understand, their shades and what the sources themselves suggest about their plausibility.
Okay, so where do we start? Maybe the foundation.
Let's start right there with a bedrock.
Yeah.
The core of our economic system, specifically the Federal Reserve, which features heavily in your material.
Right. And the material brings up a criticism that's been around a long time. Basically, under the current system, money isn't tied to physical value like gold used to be. It's created mostly through debt.
That process being the Fed buying government bonds, what critics call monetizing the debt. And the argument, which is really strong in your sources, is that this is the fundamental engine driving inflation.
Yeah, it's why currency loses value over time. The material throws out a pretty stark figure. $1 from 1913, when the Fed started, is apparently worth only about 3 cents today.
Wow. Seeing that number really lands the point, doesn't it? So the arguments presented in the material for, ending the Fed, you see sentiments attributed to figures like Representative Thomas Massey. They center on stopping this debt creation, curbing inflation, maybe getting back to some kind of monetary stability, and taking power away from this unelected board.
But then your sources immediately ask a really crucial counter question. Okay, fine, but is ending the Fed, as it operates now, even feasible? Or would trying that just be financial suicide?
That's the core tension the material wrestles with, isn't it? The global economy is just so deeply tangled up with the current system.
And the immense risk, according to the material, comes from the fact that pretty much all global wealth, one way or another, exists within this fiat currency framework. So trying to just suddenly dismantle it, the sources suggest it could just freeze markets completely.
Which means massive disruption to global trade, maybe huge unemployment worldwide. The potential fallout described sounds immense.
And the analysis in your documents seems pretty clear on this. There isn't really a ready-to-go scaled alternative. Not gold, not crypto, not yet anyway, that could just step in and handle that global function without causing chaos and, a total loss of confidence.
The sources contrast it with the U.S. going off the gold standard back in '71. That caused bumps, sure, but the dollar was already the main reserve currency. Trying to dismantle the current system where the dollar is the foundation, that's presented as way, way riskier.
So it sounds like while the sources absolutely acknowledge the criticisms of the Fed, they kind of land on a pragmatic view, suggesting maybe reform is the more likely or at least safer path forward.
Exactly. The material does explore those middle grounds, things like stricter oversight of the Fed, maybe exploring some kind of asset-backed digital currency. The idea seems to be finding ways to tackle that persistent inflation. The sources note it running around 2-3% annually based on CPI without risking a total economic meltdown.
Okay, so the takeaway from this part of the material seems to be criticisms of the Fed system are valid and numerous, but it's so deeply embedded globally that the sources strongly suggest trying to just rip it out carries potentially catastrophic risks. Risks that right now seem to outweigh the perceived benefits.
And that idea of systemic fragility, the potential for major disruption, kind of leads us into another area your sources delve into. Concerns about financial opacity, about control, particularly referencing Catherine Fitt's experiences.
Right, her account, as it's laid out in the documents you provided, it's pretty striking. She apparently ran into really deep corruption within the mortgage system when she was Assistant Secretary of Housing. And she suggests a significant chunk of the black budget might actually be financed through mortgage fraud. There's even a quote attributed to a former intelligence officer calling HUD the candy store of covert revenues.
Candy store of covert revenues. Wow, that's quite an image. How do the sources say this mechanism worked?
Well, the basic description involves FHA insuring a mortgage. The property then defaults, FHA pays off the lender, takes the property back, and then the cycle repeats. She apparently cited examples like one specific property in Chicago that was financed and defaulted on 5 times in just 1 year.
5 times in a year. That sounds less like a bug in the system and more like a feature, like a deliberate way to extract wealth.
That's certainly the implication the sources draw. And then there's more advanced fraud described. Issuing multiple mortgages on a single house, pooling these into Ginnie Mae securities, selling them off globally, Dubai is mentioned, and then skimming money from the FHA insurance fund.
And this connects back to those huge financial crisis bailout numbers mentioned in the material.
Yeah, one source highlights the TARP Inspector General figure $27 trillion in total taxpayer-backed funds deployed during the bailout. And it contrasts that with the estimated $8 trillion it would have taken to pay off every single-family mortgage in the country at that time. The material just calls that scale bananas.
Then there's this idea of missing money that the sources bring up.
Right. The material points to reports suggesting HUD couldn't account for something like $1 trillion in its financial statements between 1998 and 2015. And the Department of Defense reportedly missing $4 trillion leading up to 9/11. Now, the sources note Rumsfeld announced $2.3 trillion missing just before 9/11, but the figure cited elsewhere in the material is $4 trillion.
And there's even a suggestion in one source that a news story detailing this missing money, broken down per taxpayer, was actually scheduled to break right before 9/11 happened.
That's mentioned, yeah, as a notable coincidence. So the big question raised is, where could all this money have gone? One source offers a conjecture tracing potential flows to offshore havens, suggesting it might be financing a whole new system, even describing it as a potential breakaway civilization.
Financing a breakaway civilization with potentially stolen funds.
That's the speculation presented, yes. The idea is that these massive sums funded huge investments in black budget technology and infrastructure, things like invisible weaponry, maybe a secret space program, extensive underground facilities. The source even posits the amount potentially siphoned off could be enough to run a global government entirely on an endowment basis.
Okay, moving from these potentially hidden financial flows to maybe more visible mechanisms of potential control, your sources explore this concept of a control grid.
Yeah, the underlying idea presented is that in a world that's becoming more multipolar, where resources might be more contested, it gets harder for a dominant power to just take what it needs. So, maintaining control, maybe managing scarcity, requires the ability to, as one source puts it, cut people back, and that ability is massively boosted if you have complete control.
And the material points to digital technology, and especially an all-digital financial system, as the key enablers for this.
Exactly. The pandemic lockdowns served as a kind of real-world test case, didn't they? Physical cash became less useful, effectively limiting what you could access if you couldn't interact digitally. The sources then sketch out potential future scenarios like being able to remotely disable someone's electric car, or maybe linking access to your money to compliance with certain mandates, like medical requirements, perhaps.
So this isn't just about broad societal control, but potentially very specific, very granular control aimed at individuals.
That's a really key point coming through in the sources. With AI and sophisticated software, the possibility emerges for a system where controls could be applied almost person by person based on collected data, effectively a kind of social credit system, but potentially much more personalized and automated.
A system where maybe compliance unlocks access and non-compliance means getting locked out. What do the sources say are the components needed to build this potential grid?
Okay, they lay out a few key pieces. First, a high-quality, precise, and crucially interoperable national digital ID. Real ID is mentioned specifically as being aggressively pushed, driven by federal mandates, suggesting it's seen as foundational for a system that could eventually work globally.
Right. And second, the push towards an all-digital financial system.
Exactly. The goal, as presented in the material, is basically phasing out physical cash, forcing all transactions onto digital platforms. Actions that have been observed, like former President Trump reportedly pushing for digital tax payments, are cited as examples pushing in this direction.
Okay, digital ID, digital finance.
Yeah.
What's third?
Third is interoperable digital money. And here the sources get specific, discussing things like the Genius Act and stablecoins.
Stablecoins, okay. How do they fit into this picture according to the sources?
It's a pretty nuanced point they make. They draw a distinction between a central bank digital currency, a CBDC issued directly by the Fed, and the stablecoins proposed under something like the Genius Act. These stablecoins, as described, would still be collateralized, likely by dollars or treasuries, but they'd be issued by private subsidiaries of the very banks that own the Federal Reserve.
So the argument is that this structure gives them more freedom from congressional oversight than a government-issued CBDC would have.
That's exactly the point made in the material. This stablecoin model is presented as a potential way to circulate digital dollars globally, sort of bypassing traditional government-to-government channels, described almost as the digital equivalent of pallets of cash moving internationally.
So the plan, as outlined in the source, is to use huge amounts of this digital money, combined with private credit, to basically get populations worldwide to switch from their local currencies onto the digital dollar.
Yes, that's the strategy described. And the sources anticipate competition in this space, particularly from BRICS nations developing their own alternatives.
And the final component mentioned is the aggregation of just massive amounts of data, right?
Huge amounts. The sources point to the merging of data from Social Security, the IRS, Treasury payments, with speculation that this combined data is being privatized, fed into powerful AI systems. Companies like xAI and Palantir are mentioned by name, with Palantir reportedly holding contracts with Treasury and the IRS. Plus, you add in the aggregation of healthcare data, which the Kennedys are cited as discussing.
Creating what one source graphically calls a data beast.
Exactly. And the conjecture presented, and it is presented as conjecture, is that this whole process, unsiloing all this data, moving it into private hands, perhaps on an out-of-control basis, is specifically aimed at building the infrastructure for this kind of granular control grid. While speculative, the material suggests that if someone wanted to build such a system, this massive data aggregation would be an absolutely critical step.
This all leads us very naturally into the more speculative future scenarios you asked about, thinking about 2077, those alarming possibilities like transhumanist debt slavery, and importantly, how we evaluate the probability of these things actually happening based on the source material.
Yeah, and your sources definitely connect these concerns about surveillance and these huge databases back to Orwell's 1984. While they don't necessarily point to a single monolithic Big Brother figure orchestrating everything, the material does acknowledge that the combined effect of eroded privacy and our growing dependence on technology could absolutely mimic the outcomes Orwell warned about. One source even suggests the risk feels more emergent than orchestrated.
Meaning it's less like a grand conspiracy and more like different technological trends just converging in a dangerous way.
Exactly. But the risk, even if emergent, is still presented as very real.
Okay, and some of the sources, particularly the transcript you included, contain some very specific, very intense predictions. Let's look at how the material seems to evaluate the probability of those particular scenarios, starting with the Russo transcript claims.
Right, so that's the account from Aaron Russo detailing claims allegedly made to him by Nick Rockefeller. It touches on a new world order, a one-world government, plans for RFID chips for total control, and the idea of 9/11 being an inside job or hoax. The analysis provided in your sources evaluates these claims primarily as anecdotal.
Meaning based on one person's account.
Yes, lacking independent primary evidence. The analysis notes they fit well-established NWO conspiracy tropes, the specific allegations remain unproven, and the idea of mass implantation via chips is seen as currently implausible from a practical standpoint.
Okay, and then there's the Kohlberg transcript, which relays claims apparently from a White House insider and something called the Kosovo documents. This one discusses things like projects Pogo and Cypher to tag, track, and exterminate certain Americans, planned blackouts blamed on Iran, and Trump being a kind of scripted actor.
Yeah, the source evaluating these points flags them as extraordinary claims that lack corroboration. Specific details, like extermination using guillotines or engineered viruses, are labeled as speculative extremes. The analysis also notes that these narratives seem to tap into specific online subcultures, mentioning 4chan and YouTube, and carry a risk of invoking anti-Semitic tropes around Zionism. So while acknowledging the underlying fears about surveillance might be valid, the material suggests these specific claims reflect more anxiety and perhaps exaggeration than empirically supported plots.
So to summarize the source material's analysis on these specific points, these most extreme predictions, we're talking mass chip implants, coordinated purges via guillotines. They are framed within the sources themselves as being unverified and lacking the empirical support needed to suggest a single, unified, coordinated plot of that nature.
That's a fair summary of how the sources evaluate those specific claims, yes. They absolutely acknowledge that the underlying fears about elite control, losing autonomy, pervasive surveillance, those are concerns worth taking seriously, especially given the technological trends we just discussed. But the analysis seems to lean towards seeing competing interests and maybe more subtle forms of influence and manipulation as being more evident in the world than these kinds of unified, extreme, dystopian endgames described in those particular transcripts.
You also asked specifically about NGOs and billionaires potentially manipulating the public towards these kinds of outcomes. How did the sources address that?
Well, the sources do state pretty clearly that powerful organizations and wealthy individuals absolutely fund initiatives that shape policy. Think tanks, foundations influencing health, education, migration policies. Critics cited in the material argue this can, and sometimes it does, serve elite interests. The Gates Foundation's influence on global COVID-19 policy is mentioned as an example people point to.
So the sources acknowledge that subtle influence exists.
Yes, influence through funding, through shaping media narratives, maybe through algorithmic bias. The material suggests that is present and impactful. However, it also indicates that making the leap from that kind of subtle systemic influence to believing in coordinated extreme manipulation like secret plans for guillotines or forced mass chip implants, that leap isn't corroborated by the evidence presented within the sources themselves.
Okay, let's pivot back towards 2077, thinking again about Continuum in the future. Your sources do try to extrapolate some current trends forward. What do they project?
Well, the kind of timeline projections discussed in your sources include things like AI and automation potentially concentrating power even further, transhumanism blurring the lines between human and machine becoming more mainstream, and of course, surveillance becoming potentially ubiquitous.
And what about that specific transhumanist debt slavery scenario from Continuum? Where extreme debt essentially leads to people being technologically altered into compliant, maybe less than human workers. How does your source material evaluate the possibility of something like that?
That specific scenario gets a somewhat different evaluation in your source material. It's described as chilling but feasible.
Feasible? Okay, that's different from implausible or unverified.
Right. The analysis suggests this could become a non-zero probability if certain conditions develop. Specifically, if economic inequality worsens dramatically and if corporations gain largely unchecked power to exploit desperation by offering essential upgrades or even basic necessities, but tied to inescapable, perhaps body-altering debt contracts. The sources draw parallels to historical forms of indentured servitude.
So that evaluation, chilling but feasible, gives that particular scenario a different kind of weight, a higher perceived probability based on trends than some of the other really extreme predictions we discussed earlier.
It definitely seems to. It's presented less as a secret plot and more as a potential dystopian outcome that could emerge from current socioeconomic and technological trajectories if they aren't carefully managed or redirected.
You also included this fascinating idea about using AI to actually simulate some of these radical economic scenarios. Now, maybe no single public simulation combines everything you asked about ending the Fed, going all crypto, gold-backed, ending derivatives all at once. But your sources do confirm AI is being used heavily in economic modeling these days, right?
Oh, absolutely. Large language models, deep learning, they're increasingly used for complex economic simulations. So while your exact combination might not be something publicly modeled, the tools and the kinds of data sources needed to potentially simulate aspects of these scenarios definitely exist.
Okay, so hypothetically, based on the capabilities described in your sources, how might an AI approach simulating some of these major shifts? Let's start with ending the Fed.
All right, so to simulate ending the Fed, an AI could theoretically draw on historical economic data from before 1913. It would need to factor in the current massive national debt. The material puts it around $33 trillion. Then it could model really complex dynamics, things like the velocity of money, inflation expectations, trying to project outcomes that could range anywhere from runaway hyperinflation to a severe deflationary collapse.
Okay. How about simulating a world that suddenly goes all in on crypto?
Well, AI models are already used for trying to predict crypto prices and market behavior. So you could extend that to simulate adoption rates, transaction speeds, comparing something like the Bitcoin network to, say, the Visa system. It would have to model the inherent volatility, the risks of leverage, the lack of a central bank safety net, maybe drawing on real-world examples like the Celsius collapse. And AI could even try to model the impact of potential government actions, like that idea mentioned in one source about a strategic Bitcoin reserve.
And simulating a return to a gold-backed system.
And AI could incorporate historical data from the gold standard era, maybe the late 19th century up to the 1930s, alongside data on modern digital gold assets like Tether Gold. The simulation would have to weigh the potential stability offered by gold against the economic rigidity it might impose, potentially choking off credit growth, increasing the risk of bank runs or panics. It would also need to model practical risks, like securing physical gold reserves or dealing with sudden spikes in demand.
And lastly, simulating the end of financial derivatives.
For that, an AI might look at economic data from periods before derivatives became so widespread, maybe pre-1970s. It could also analyze modern decentralized finance, DeFi markets, perhaps drawing on academic studies like those mentioned from the St. Louis Fed. The simulation would focus on the trade-offs. You might reduce certain kinds of systemic risk, but you lose crucial tools for hedging risk and discovering prices, which could itself lead to significant market volatility, maybe referencing events like the CETH collapse mentioned in the material.
So even if there isn't one single public simulation of your exact combined scenario, the tools are there to model the potential outcomes of these individual shifts. Based on the data and trends discussed in your material, what did the sources suggest are the likely types of outcomes if such radical shifts were actually attempted?
Well, synthesizing across the sources, the consensus seems to be that any attempt at such radical, sudden shifts would almost certainly begin with significant short-term chaos. Think major market instability, liquidity drying up, hedging mechanisms breaking down. Longer-term outcomes are harder to predict, but the material suggests systems like crypto or maybe digital gold could gain traction. However, this would likely come at the cost of a sharp economic contraction. Maybe a 10-20% drop in GDP is mentioned, drawing parallels to the aftermath of the 2008 crisis.
And what about the global impact?
A major consequence, according to the material, would likely be a significant weakening of the US dollar's role as the world's primary reserve currency. This would probably force other nations to accelerate their own explorations of alternatives much faster than they currently are.
The sources also acknowledge, though, that running these kinds of complex simulations accurately is really, really hard, right?
Oh, absolutely. The challenges mentioned are immense. There's just limited historical precedent for shifts of this magnitude in today's highly integrated global economy. The sheer complexity is vast, and there's always huge uncertainty, especially around how governments might regulate things or how the public might react unpredictably.
Okay, let's bring this back down to earth, maybe, to a very concrete challenge facing the current system, the U.S. national debt. You asked a pretty stark question. Will it become unmanageable? Specifically, could the U.S. actually reach a point where it literally can't afford to pay the interest on its own debt?
Yeah, that's a very real challenge, and it's discussed quite a bit in your sources. The numbers cited are sobering. We're talking roughly $33 trillion in national debt currently. That's projected to be around 120% of GDP by mid-2025, meaning the country owes $1.20 for every dollar the entire economy produces in a year.
And the cost, just to service that debt, the interest payments, is climbing fast. The Congressional Budget Office, CBO, estimated something like $892 billion just for interest in fiscal year 2024. That's already a huge slice of the budget, and is projected to hit over $1.2 trillion annually by 2030.
Right. And when your sources talk about the debt becoming unmanageable, they define it pretty clearly. It means reaching a point where the government simply cannot make those required interest payments without resorting to drastic damaging measures. That could mean outright default, which is seen as highly unlikely for the U.S., but theoretically possible, or imposing absolutely crippling austerity measures that would tank the economy, or the other route, resorting to hyperinflation by essentially printing money uncontrollably to devalue the debt away.
Okay, so what are the key factors based on material that determine whether the debt actually reaches that unmanageable point?
There are several crucial ones highlighted. First, just the sheer size of the debt relative to the economy, that debt to GDP ratio. The CBO projects it could reach 140% by 2030 if current trends continue. Now, a high ratio can be managed, but only if economic growth consistently outpaces borrowing costs. Second, and maybe more immediate, is the rising interest burden itself.
That $1.2 trillion projected for 2030.
Exactly. That could reach maybe 4.5% of GDP, assuming interest rates stay relatively moderate. The material notes serious concerns that interest costs alone could soon surpass the entire defense budget.
That would be a massive shift in national priorities, forced purely by having to service the debt.
It really would. And if interest rates were to go significantly higher, say if they average 7% by 2030, then the interest payments could blow past $1.5 trillion a year, making a fiscal crisis much more likely. Economic growth is another huge factor. Strong growth makes the debt burden relatively smaller, but current projections show deficits remaining stubbornly high.
And why are the deficits staying so high?
This is where structural issues really dominate the discussion in the sources. Primarily, it's the rising costs of Social Security and Medicare driven by the aging population. These costs are largely on autopilot. And finally, there's always the background risk of the Fed being forced to monetize too much of the debt-buying bonds to keep rates down, which could itself fuel inflation, although true hyperinflation is generally seen as unlikely unless global confidence in the dollar completely collapses.
So where is the actual tipping point, according to the material? When does it become unsustainable?
The tipping point seems to arrive when those interest payments start consuming such a large and growing portion of the federal budget or the economy as a whole that they crowd out everything else and potentially trigger a crisis of confidence. The CBO's own baseline suggests interest costs could hit around 20% of all federal revenue by 2035. Now, that might still be manageable with very tough choices, but in higher interest rate scenarios, it could go significantly beyond that. The real risk highlighted isn't so much a technical default because the U.S. can always print dollars to pay dollar debts, but rather, as critics point out, the risk of serious currency devaluation if that's the path chosen.
Okay, so let's get to the core timing question you pose based on these sources. When might the U.S. debt actually reach that unmanageable point? What kind of timeline are we looking at?
All right, breaking it down by time frame, based purely on the analysis presented in your material. Short term, let's say the next 5 to 10 years. It's generally considered unlikely to become unmanageable in this window. The U.S. is expected to be able to service its debt, supported by continued global demand for the dollar, for now, and the Fed's ability to manage rates.
Okay, manageable for the immediate future. What about the medium term? Say 10 to 20 years out.
This is where the probability starts to increase, according to the sources. If those structural deficits stay high, maybe consistently above 5% of GDP, and if interest rates remain elevated or even climb higher, the analysis suggests interest payments could potentially reach 25–30% of federal revenue sometime around 2040. At that point, the material suggests really painful choices like severe austerity or substantial tax increases become incredibly difficult to avoid. Investor confidence could also become much more fragile if the debt-to-GDP ratio just keeps climbing relentlessly over this period.
And then looking really long-term, 20-plus years out.
Here, the sources suggest that without significant policy changes, real reforms to address that structural spending on entitlements or find new revenue sources, it becomes likely that the debt does become unmanageable in the long run. The projected growth in entitlement spending, combined with rising interest payments on an ever larger pile of debt, could make those interest costs truly unsustainable, maybe hitting 8–10% of the entire GDP. This becomes especially true if global demand for U.S. dollars starts to weaken significantly over that time frame.
Are there factors mentioned that could mitigate this, maybe push that timeline further out?
Yes, definitely. The sources mention the obvious ones. Significant policy changes on spending and taxes, or alternatively, a major unexpected economic boom, perhaps driven by hope for productivity gains from AI that allows growth to significantly outpace debt accumulation. Another possibility mentioned is the Fed choosing to tolerate higher inflation for a period to effectively reduce the real value of the outstanding debt. Although the material notes this carries its own significant risks, particularly alienating bond investors.
And could AI be used to simulate this specific debt scenario as well?
Yes. The sources indicate AI could absolutely model this. It could incorporate historical data on how interest rates spike when investor confidence drops, simulate different outcomes if the U.S. credit rating were downgraded, or forecast various inflation scenarios to show how they might erode wealth and impact the debt burden over time.
So the bottom line from the material seems to be Probably not unmanageable in the short term, becoming a distinct possibility in the medium term if current trends persist, and looking increasingly likely in the long term without significant reforms.
Yeah, it fundamentally boils down to this. Those rising interest payments eventually force incredibly tough choices. Either you implement austerity to cut spending, or you risk monetization, which carries the danger of inflation and devaluing the currency. Strong economic growth and proactive policy changes are the main ways to buy time, but those underlying structural spending issues, particularly around entitlements, make that long-term unmanageability a distinct probability discussed in the sources if nothing fundamental changes course.
Wow. Okay. That was a truly deep dive. We've pulled apart some incredibly complex, really interwoven issues today, all stemming from the questions and the rich source material you provided. We went from the absolute foundations of the financial system, questions about hidden money flows, through the actual mechanisms of potential digital control that might be under construction, all the way to speculating on AI-driven futures and facing the stark reality of the national debt trajectory.
It was definitely dense, but seeing it all laid out like this really highlights how interconnected everything is, doesn't it? The way the financial system is structured directly influences the kinds of control mechanisms that become possible. Technological advances enable completely new forms of surveillance and new kinds of financial systems. And underlying it all, economic stability, particularly how that rising debt burden is managed, heavily influences the perceived probability of these different future scenarios playing out, including some of those really extreme ones, like the debt slavery concept from Continuum you brought up.
And that brings us full circle, back to our mission for this deep dive. These sources you shared allowed us to really examine these possible futures, including the ones that, let's be honest, some people might instinctively want to just dismiss as conspiracy theories. Instead, we try to use the information provided in the sources to understand the proposed mechanisms, things like digital IDs, digital money, mass data aggregation, social credit concepts, and to evaluate what the sources themselves suggest about the potential plausibility or the probability of different aspects or effects of these scenarios coming to pass, based strictly on the evidence presented in the material you gave us.
Yeah, the goal wasn't really to validate or debunk any specific theory wholesale, but more to understand the components and the dynamics being outlined in these documents. Because, as these sources suggest, understanding those dynamics might be key to navigating whatever challenges lie ahead.
So for you, our listener, building on this idea that all these trends, financial, technological, political, are so deeply intertwined, here's maybe a final provocative thought to chew on, drawing directly from the material we covered. Given the potential for these significant shifts in finance and control mechanisms that your sources describe, alongside that very real long-term debt trajectory, what level of systemic risk, encompassing all these interconnected factors, are we as a society perhaps currently underestimating?
That's a question that certainly feels a bit more urgent after walking through all this analysis.
It really does. Thank you again for sharing your source material and for joining us on this deep dive.